quick glance across Asia will tell you that aside from the SGX Nifty, the rest of Asia is all down and out. Japan, China, Hong Kong, everything's trading under 2% cut for Japan and Hong Kong. SGX Nifty, that's trading 72 points higher right now at 10,902. But let's bring in an important market voice. Andrew Holland, CEO of Avendus Capital Alternate Strategies, is joining us right now on the show. Andrew, thanks very much for taking out the time. This is what the market has been anticipating. It has been finally announced by the finance minister. Indeed, a big positive, but whether it has any long-term positive implications or no, we don't know. But for short term, at least, it's definitely a shot in the arm.
Yeah, absolutely right. It is. It's a welcome move by the finance minister. Everyone's been asking for this. We've got what we wanted, so we should rejoice in that. But you're correct. We're kind of coming into a very difficult kind of global scenario where global markets are down. So, listen, India, when markets globally were rising, we were the one falling because of our own issues. So we should relatively, I think, do better going forward. If the markets either move down or up globally, I think we'll be an outperformer in the very short term. But, I think we need to hear what the finance minister has to say on the other kind of industries going forward, because what the real signal is that the economy is slowing very quickly. So this will help stem the tide, and then we need to see the economy start to pick up, maybe in 1 quarter's time. So this will give us a respite for them to see how the economy reacts to some of the measures that the government's doing.
While obviously these measures are good enough to arrest the fall that we've been seeing over the last month or so, is it enough to really propel the markets higher back to those record highs?
I think that would take a number of things. I think that would take, one, that, some of the trade war problems are moving away, or the expectations that they will move away, and which in that case you'll have a very slow global economy with lower interest rates, the same in India. But obviously the recovery in the Indian economy could be a little bit quicker than some of the problems that you're seeing or facing in global markets. So I think India would actually do a lot better in that scenario in the kind of medium term. But in the very short term, we do have this extra drive of taking action, whereas at the moment we're the global world just suffering from what President Trump is tweeting.
Yeah, well, the world moves according to the Twitter man. Andrew, just one quick question on this, the FPI surcharge removal. Were you on the sidelines because of this surcharge and this having been done in the way it has? Because I presume that while it's been done for all equity market linked transactions, business income for AIFs, including the derivative income and a few other things, are still under the purview of the surcharge. But having said that, in the current avatar, does it lead you back to investing if the opportunity presented itself?
Yeah, I mean, so the investment and tax, investing in the markets and tax are different matters. But no, I think we'll see a little bit of how the global economy plays out today in terms of global markets, because there's a lot of insecurity there. I don't see, to be honest, even with the change that foreign portfolio investors are going to rush back to India, given what they're waking up to at the moment. So I'd just be a little bit cautious on there. As regards Category 3 hedge funds, I mean, obviously, for foreign investors, you're charging derivatives as a capital gains tax, and you're not doing it in India. Seems slightly odd to tax your own funds higher than foreign investor funds, but hopefully we'll get around that somehow.
Okay. Andrew, we'll leave it at that. Thanks much for taking the time out and joining us for that quick perspective.